Hello, aspirants! Welcome to today's explainer from Rungta IAS Academy. Today, we're taking a close look at a really crucial update in the Indian economy, one that intersects directly with your General Studies Paper 3 syllabus. Let's dive straight in. The core objective of this update is actually quite profound. We're looking at bridging the age-old gap between physical gold and the financial markets. Now, for your mains examination, understanding this financialization of the yellow metal is absolutely paramount. Why? Because it represents a critical structural shift in exactly how domestic capital is mobilized right here in India. Section 1. NSE launches Electronic Gold Receipts. Before we get deep into the macroeconomic analysis, we really need to establish the fundamental current affairs facts for your prelims. So, the National Stock Exchange of India, the NSE, has officially launched Electronic Gold Receipts, or EGRs, as a completely new trading segment. This is literally the foundational update you're going to want to jot down for your notes. Moving on to Section 2, Transparent Price Discovery Mechanism. This brings us right to the core economic rationale. This is the analytical edge you'll need for structuring a really high-scoring mains answer. Right, so this leads us to a critical question for all our aspirants to consider. Why is transparent price discovery so crucial for the yellow metal in the first place? Well, historically, physical gold pricing in India has completely lacked uniformity. It varies significantly from market to market and even from jeweler to jeweler. So the primary expectation behind the NSE's big move is to create a much more transparent and efficient price discovery process. This electronic system is designed to bring nationwide uniformity and crystal clear transparency to exactly how this precious commodity is valued across the board. Section 3, Physical Gold meets Financial Markets. We are now looking at the structural integration of two asset domains that have, for a very long time, remained quite isolated in our country. Think about it like this. On one side, we have traditional, idle, physical gold. It's often just sitting unproductively in household lockers, right? Then on the other side, we have our dynamic, formal financial markets. These new EGRs act as a vital bridge. They allow investors to seamlessly convert a physical commodity into a tradable financial asset. Frankly, this is a real game changer for integrating stagnant household wealth into the broader, productive financial ecosystem. By definition, the Electronic Gold Receipt platform provides a regulated, secure, and technologically advanced environment for trading. And listen, these are the exact keywords you should be utilizing in your descriptive answers to demonstrate to the examiner a truly precise understanding of the platform's infrastructure. Let's just quickly reiterate those three foundational pillars. First, the platform is regulated, ensuring strict compliance with market watchdogs. Second, it's secure, protecting investor wealth from physical theft or loss. And third, it's technologically advanced, bringing modern trading efficiency to a deeply, deeply traditional asset class. Finally, Section 4, Preparing for the UPSC interview. Because as serious aspirants, just memorizing facts isn't going to cut it. You must be prepared to defend your macroeconomic analysis when you're actually facing the UPSC board for your personality test. So I want to leave you with this interview-style question to really ponder. How does bridging physical and financial gold markets ultimately impact India's broader macroeconomic stability? I want you to think deeply about the efficiency, the transparency, and the integration of idle assets that we've discussed today. Thank you so much for tuning into this explainer from Rungta IAS Academy. Keep revising, stay focused, and we wish you all the absolute best in your preparation.